Hello and welcome to Crypto Weeklies. In this video, we discuss MicroStrategy, none of the content financial advice. Right now, again, this is the homepage of my website, cryptoweeklies.com. Right now, Bitcoin and ETH both are above zero point 0.3 risk on the crypto composite risk model. This model takes into consideration of all individual risk-based models that we have on the website and aggregates the overall score between 0 and 1. Anything above 0.3 risk is typically outside of the accumulation zone, and again this is in line with what MSTR has done over the last couple of weeks as well. Again, now the price of MSTR is above the 200-week simple moving average after spending entirety of February and March and almost all of April in below the 200-week moving average. The blue line over here is the 200-week simple moving average. You can see that in the past bear market as well of 2022, there were a couple of weeks over here where the price in month of August where the price went above the 200-week simple moving average and then came back down. Let's say if something similar happens this time around, the line to test the line or the price to test that kind of feature in the future is anything below $152. If that happens, again in the short term, that might sound bearish, but also the silver lining with that one would be that the drop in February 2026, that drop at around $100, could have a confirmation to be a similar fractal compared to that May 2022 drop. So which did the max damage in the bear market of 2022. So if that path kind of follows for MicroStrategy, if there is a short-term bearish action in after this magnificent counter trend rally in the bear market, what could typically happen is that if the price action were to fall yet again to that level like it did in February 2026, this time around that would be lower than not just the 200-week but also lower than the 300-week simple moving average like it was in later half of 2022. Something similar, if that kind of happens in 2026, at least the optimistic scenario would be the accumulation phase, again not financial advice, anything below the 200-week simple moving average starting again January 2026 till now about mid-April 2026 would be still within the realms of the accumulation territory. So that's where we are right now. The shorter term target for MSTR could be again, now that there is a breakout above this point, above this area in terms of the Fibonacci level at where that 0.786 held as support, and then price rallied to that 130 or dollars level, which is the 2021 high, and now holding that level as support, rallied to the 20-week simple moving average. Now in mid-March 2026, now that we are in the 22nd day of April, 3rd or 4th week of April, there has been a breakout not just above the 20-week simple moving average but also the 21-week exponential moving average. Those levels to watch are somewhere between $147 and $165. Something similar did happen in the last bear market year as well. If we look at the territory in that August 2022 area over here, if zooming out a little bit, zooming in a little bit, the rally in that couple of weeks that I mentioned was above the 20-week and the 21-week exponential moving average as well. Something similar this time as well. So these areas to look for in terms of the targets for the future, shorter term future, is this $201 level, or somewhere between 190 to so the bottom of the range is somewhere between $180 where the current price resides, and the top of the channel at around $201. So about a $20 gap between this current price action and this blue line over here. That's the 1.618 from the 2021 cycle, and that's where the price also held as significant resistance in the March 2024 rally before that cool down for the remainder of couple of quarters before breaking out in October-November 2024. So in the short term, the target to the upside per this analysis is somewhere between $180 to $200 to the upside, and to the downside, the first primary level of support is at around the 20-week simple moving average, which is at $148. That again, there is a confluence at that level where the 200-week simple moving average also is at around $152. So even if there is a sharper drop in the couple of weeks, and the price action has to, if it has to go below the 200-week, at least the 20-week simple moving average is slightly below it, so that in the short term could offer some sort of a support. You can compare this with the last bear market as well, in 2022, when the price fell below that area in August 2022. It generally held that 20-week simple moving average as a loose support. I wouldn't say that the price didn't go below the 20-week. It hovered around the 20-week simple moving average for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost the entirety of quarter, the 11 to 12 weeks. That's almost a quarter. So that area did offer a significant level of support. If something similar happens this time around, where the price action, if and when goes below that 200-week area simple moving average, and then the hovers around that $150 area, that could also make the slope of the 20-week simple moving average kind of a flat slope than that downward trajectory that 20-week, the red line over here, has been having since about September 2025. That could finally change if that kind of price action were to manifest. So for example, over here, the slope of the 20-week simple moving average started having a flatter trajectory starting that first major correction in that August month, and then subsequently that the slope of the descent kind of flattened out, and it stayed going down till about January 2023, but essentially the price action did not go as further down from that May 2022 bottom. So if February 2026 is drop is any similar to the May 2022 drop, then the trajectory for MSTR could be again testing that double bottom sometime in late August or September, because this happened 2 months before 2022. In 2022 this happened in May. This time in 2026 this occurred in February. One could potentially say that if the May drop happened in February, the November-December drop could happen in September-October 2026. So that's also a realistic case for MSTR to carve a double bottom. If that happens, that could be a great time to DCA in MSTR, not financial advice, just looking at the past cycles where the price action goes sub 200 week as well as sub 300 week simple moving average, the green line and the blue line over here. When they flip, the blue line flipping white and the green line flipping red is typically an area for MSTR DCA at the bottom. Again, no one knows where the actual bottom for MSTR could be. We do have some models for that, the ETFs and proxies related model, starting with the forecast analysis using time series forecast. Since MSTR started buying Bitcoin in August 2020, these are the weekly average price of MSTR stock, and then using time series forecasting techniques such as seasonal ARIMA and then confidence levels using standard deviation and LSTM based approach using machine learning technique. The following are the projections for MSTR if it were to bottom in the next 6 months. If the bottom is so from April till let's say late September, the non-panic floor for MSTR is that the drop to $106. This might look slightly worse on the average price perspective, a drop to $106 at a weekly average price. So for example, over here, the major damage occurred in May 2022, yet the weekly average price bottomed out in January 2023. Nonetheless, the bottoms for MSTR were, from the candle body perspective and the candle wick perspective, were very close to each other, that in the May drop and the December drop. So something similar this time around could be, again, although the weekly average price for February 2026 bottom was 128, the actual daily candle or the weekly candle wick went as low as about $104, only to go up in the short term like it did till August 2022, and then a slightly lower low on the weekly average price, but a double bottom on the candle bodies, like it was if you include the candle wick for the initial drop. So if something similar were to happen again, this is also correlates really well with the and has a confluence with the machine learning based price predictions for MSTR at around $106 for a double bottom. At that level, DCA for MSTR, if the price action were to manifest similar scenarios compared to that 2022 floor and a double bottom, DCA at let's say somewhere closer to somewhere closer to $120 would potentially be below the 300-week simple moving average, which is currently at around $117. So if let's say there is some deviation in the 2026 bear market, we don't know yet, but if we were to discuss that kind of a deviation where let's say the price stays elevated for more than couple of weeks over here at these levels, then the floor kind of shifts from the current valuation, which is the start of the floor, that is currently at around $151. It might shift from $151 to, let's say, the air gap between the current price and the floor for this week is about $30. So $180 is the current price, whereas the floor for this week is $150. So if this price action stays elevated for more than a couple of weeks, so let's say $10 difference over here makes also that difference in the bottom at around $10. So instead of the bottom being $105, it could be $110 or $115. The pessimistic scenario is if let's say there is 1 month of panic, then the floor shifts from the $150 level to, let's say, somewhere close to $100 in the initial drop itself, and then subsequently from that initial damage, let's say the floor starts behaving from the first drop into about instead of $120 to $100, then again the bottom prediction in that scenario, instead of being at around $106, it might be at around $85. So that's with some if there is 1 month of panic in that subsequent drop for MSTR, we don't know. So the optimistic scenario is instead of looking at one single price of at around $105, between $100 and $105, we look at a range between $110 to the upside for the bottom and $85 to the range bottom for that eventual drop for MSTR in 2026. With that, the current risk level with respect to the regression based analysis, so again different models dictate different outcomes. The regression based model says that the regression based fair value estimation for MSTR is at around $450. The undervaluation territory for MSTR is any time when the price is closer to that bottom green dotted line, and once that kind of happens, DCA below that level, that bottom dotted green line level usually works out. Not financial advice. Again, this drop kind of is already behind us. The first drop, that is drop below the dotted undervaluation bottom regression line, already behind us in February 2026. Now the price action is above that dotted green zone, which starts at around $139. Anything below $139 is considered sufficiently undervalued by this model. Right now the risk is about 3% to DCA to MSTR. If you toggle out all the areas where the risk has been in this risk band between 0 and 0.1 or risk level 1, DCA at those levels, definitely not the worst idea, at least looking from the historical context of what MSTR has done from cycle to cycle. So currently, although this model says that there is a elevation with respect to the dotted green line, this elevation might be short-lived, and MSTR might have to go close to that dotted green line or slightly below the dotted green line in the remainder of 2026, at least once in that remainder of 2026 year. With that, I would like to conclude by saying all of the models pointing to a bottom range between $110 $10 to the upside, between $110, $115 to the upside, and $85 to the downside. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.